Options trading can be exciting. It offers the potential for substantial profits. However, it's crucial to understand the risks involved. Options are complex financial instruments. They come with inherent risks that every trader must be aware of. By understanding these risks, you can make informed decisions. Informed decisions are key to successful options trading. Options derive their value from an underlying asset. This asset could be a stock, index, or commodity. The price of the option fluctuates based on the price movements of this underlying asset. This connection to the underlying asset is what makes options trading potentially profitable. However, it also exposes traders to various market risks. Before diving into options trading, it's essential to educate yourself. Understand the different types of options. Learn about options pricing models. Familiarize yourself with trading strategies. Knowledge is your best defense against potential losses. It empowers you to make calculated decisions. Options trading is not suitable for everyone. It's crucial to assess your risk tolerance. Consider your financial goals. Only invest what you can afford to lose. Options trading involves a high degree of risk. It's not a get-rich-quick scheme. It requires patience, discipline, and a thorough understanding of the market. Options trading involves several types of risks. Market risk is inherent in all trading. Time decay erodes options value. Volatility risk affects premiums. Leverage magnifies both profits and losses. Managing risk is paramount in options trading. While it's impossible to eliminate risk entirely, several strategies can help mitigate potential losses and protect your capital. Research and due diligence are essential before entering any trade. Thoroughly analyze the underlying asset, market conditions, and options pricing dynamics. Understand the factors influencing the options price. Consider using technical analysis tools and indicators to identify potential trading opportunities. Diversification is a fundamental risk management principle. Instead of putting all your eggs in one basket, spread your investments across different asset classes, sectors, and option strategies. This approach reduces the impact of a single losing trade on your overall portfolio. Risk capital allocation involves setting aside a specific portion of your capital for options trading. Determine an amount you're comfortable risking on any given trade. Never invest more than you can afford to lose. This disciplined approach helps prevent catastrophic losses from impacting your overall financial stability. Stop-loss orders are an invaluable tool for limiting potential losses. They automatically close your position when the options price reaches a predetermined level. This strategy helps protect your capital from significant downturns. Consider using trailing stops to lock in profits as the options price moves in your favor. Section 4. The Compass of Success. Research and due diligence. In the dynamic world of options trading, knowledge truly is power. Research and due diligence are non-negotiable for any trader aiming for consistent success. This involves delving into the intricacies of the market, understanding the factors that influence option pricing, and staying abreast of current events that impact your chosen assets. Start by gaining a solid understanding of options pricing models. The Black-Scholes model, while not perfect, is widely used and provides a framework for understanding how options are valued. Familiarize yourself with the Greeks, such as delta, theta, vega, and gamma. These measures provide insights into how an options price is likely to react to changes in various factors. Next, delve into the world of the underlying asset. Whether it's a stock, index, or commodity, understanding its historical performance, industry trends, and future prospects is crucial. Utilize fundamental analysis techniques, such as examining financial statements and industry reports, to gain a comprehensive view of the asset's potential. Staying informed is an ongoing process in the ever-changing financial markets. Regularly follow market news, economic data releases, and company-specific announcements that could impact your options positions. Subscribe to reputable financial publications, set up alerts for price movements, and engage with online communities of traders to stay ahead of the curve. Section 5. Safeguarding your investments. Stop-loss orders. Stop-loss orders act as silent guardians, protecting your capital when the market moves against you. They are instructions to sell an option at a predetermined price. Once triggered, the order becomes a market order. Regularly review and adjust your stop prices based on market conditions.